We all know that real estate has created more millionaires than any other industry on the planet. We also know that it has created a lot of heartache due to mismanagement, overborrowing, and just simple life events that happen to all of us. Welcome to the Cash Flow Pro podcast. My name is Casey Brown, and I am your fearless leader. And although we might be bourbon sipping and at times foul-mouthed Southerners, we will always do our best to be honest, straightforward, and due diligent with all of the information we pass along to you. Welcome to the show. Hey there, and welcome to today's episode of Cash Flow Pro, your daily real estate investing podcast and YouTube channel. I am here today with Ken Gee of KRI Partners, and he was just telling me that he has an office in Cleveland, and they also have an office in Tampa, and for some unknown reason, he's hanging out in Cleveland today when Tampa, I assume, is probably available. So anyway, Ken, how are you today?
I'm doing great. How about yourself?
Oh, man, we couldn't be better. Like my stepdad always used to tell us or tell people when they'd ask, the kids aren't in jail and the wife hasn't ran off, so life's good.
I like that. I like that a lot.
Everything else can be dealt with.
That's right.
I guess.
That's right.
Anyhow, so tell us a little bit about yourself, how you got into the space, and kind of what you got going on, and then we'll go from there.
Yeah, so I grew up in a town west of Cleveland called Toledo, Ohio. Got my undergrad from Toledo in finance, then got married, moved to Cleveland, and got my master's degree from a small college called Case Western Reserve University, small private school, while I was a commercial lender at a local bank that's now, it was a regional bank that's now part of PNC. After a while, then I decided as I was pursuing my master's degree, I wanted to become an accountant. So I did, passed the CPA exam in Ohio, and went to work for Deloitte for 7 years, one of the big accounting firms. And during that time, the craziest thing happened to me. I thought I was doing everything right? Your parents told you to go to school, get a good job, all will be good. Well, my daughter, it was middle of the night one night. My daughter was, she needed her nighttime feeding. My wife was in bed. My son was in bed. And I love that time because her and I, that's good father-daughter time, right? You can't beat that. As your kids grow up, right. You really appreciate that. Yep. Well, as I would do that night after night, I started to get more and more frustrated because I realized that I was doing everything I was supposed to do, but I couldn't figure out how I was going to put her through school without taking on a ton of debt. I couldn't figure out how I was going to retire. I couldn't figure out how I was going to do all the things that I wanted to do.
Yep.
And so eventually I woke up and said, you know what, this needs a change. So I spent a couple of years and a whole lot of money trying to figure out the real estate game. This is back in the late 90s. So there weren't all these great podcasts like yours around to help people figure this stuff out. So I went to local apartment association meetings and took rental owners courses and tried to network as much as I could. And in 1997, I finally pulled the trigger on a 28 unit property in Cleveland, Ohio. Bought another one, 24, I think was the second one. The third one was 22 units. And here's what changed my life. So about 3 years after I bought that first deal, I sold all three deals and made a profit over $500,000. Wow. And while I was working at Deloitte. Right. So it was at that point in my life, before I told you I was trying to figure out how I was going to put her through school. How was I going to retire? How was I going to, get the life that I wanted? Because if you know much about CPAs, they work really hard, a lot of hours. And I wasn't getting there. And here I did this real estate thing on the side and put $500,000 in my pocket, in my bank account. So for the first time in my life, I had real money in my bank account. So for the first time in my life, I knew how I was going to put her through school. I knew how I was going to do everything that I wanted to do. And then over time, I just continued to just rinse and repeat, just continued to do it. And my life completely changed from that point on.
Yeah, man. I mean, $500,000 would change a hell of a lot about a lot of people. You know what I'm saying? Especially if you can turn around and put that into especially if you can turn around and put that into some kind of cash flowing assets. You know what I'm saying?
Yes, sir. That's what I
Uh,
did. So we're 18 deals later. We're still here doing it. I ended up quitting my job as a CPA, and now this is all I do.
that's man, that's killer. And your 18 deals. So from 97, right? Is that the year you said? What
Yeah,
year
this is
was
the
that?
first deal we did. Yep.
Okay. And so 97 through today, you're 18 deals later. And do you
hmm
all raise outside capital as well?
We do. Yeah. So in the beginning, my first deal, I borrowed with half the down payment off my equity line. The other half I got from my in-laws. And so, you kind of scrape it together to do your first deal, right? You do whatever you got to do. I wouldn't advise people borrowing money to go buy investments, but that's what I did, right? And that's how I got started. So in the beginning, I did it with my own money. Then I brought in a partner. We did a couple deals together, and then after I had enough experience that I felt like, you know what, I feel okay now asking somebody else to invest with me that I didn't know. So we started down that syndication path. Feeling a little more confident. I didn't want to ask for money if I hadn't really done it on my own and done it successfully. So we syndicated a number of deals, and now we've actually migrated to the blind pool fund uh, structure where we go out. The syndicators, they go find the deal, then they go raise the money to get that deal done. Right.
Right.
That's as you know, that's a stressful event. So we buy everything we do is in Florida and in very competitive growth markets.
Okay.
So that's just hard because everybody's syndicating in those markets. So I said, you know what, we got to go put the money in front of the deal. So we went out, raised a blind pool fund. I was familiar with the private equity model because I did a ton of that kind of work when I was at Deloitte. So I was very familiar with the model and successfully raised our first fund at about 12.5 million and went out and deployed it in 3 deals. And now we're on fund number 2. Our returns have been incredible. Super, super thrilled about that. And, so the ball's rolling pretty well right now.
So that brings a ton of. Sorry, I'm trying to get my phone plugged up here so that we keep our what is it? Keep our lifeline to the outside world, right?
There you go.
So that brings a couple of questions up because there's a lot of folks that are wanting to, I guess, maybe either start a fund or are wanting to look to the fund direction. And I'm assuming that are you approaching the same investors that have always kind of invested with you as you've moved through the deals? Are you bringing on new investors into your fund? And if you are, of course, that begs the question: where are you finding new investors? Because everybody wants to raise money for a fund, but nobody has a good story to go along with it in order to be able to raise that capital.
Yeah. So, when I grew up, a lot of guys that do this start off with a pretty good circle of influence, right? They know a lot of wealthy people. I didn't. Growing up, I was in Toledo, Ohio, a small town. My parents, we didn't make a lot of money. Our house that we grew up in was less than 1,100 square feet. So, we didn't have this wealthy group of friends. So,
Sure.
really, when I started raising money, it's kind of one relationship at a time. And so, what we do now, most of our investors follow us. Sometimes people's life changes or whatever, and they drop out. But I would say 90% of the people that invest with us continue to follow us from deal to deal because our returns have been anywhere from 15 to 35% annual returns. I mean, they've just been crazy returns. So people tend to like that and they'll continue to follow you. Now, in addition to that, because I didn't have this big circle of influence, I had to figure out how to grow that, right? So your investors will tell their friends if they're having a good experience, hey, I'm comfortable, Ken. You guys need to check him out. So they're happy to refer new people in, but that takes a long time to make that really grow in terms of volume. So we do 506c deals. So that means that we can go out and solicit openly, but in exchange for that, we can only have accredited investors in our fund. So that's what we chose to do. And now we've done all sorts of trade shows. We've done all sorts of podcasts. We've done all sorts of digital marketing. We're all over the internet with LinkedIn and all that kind of stuff. So, combining all of those things has really allowed our investor pool to grow. and they, so in this world, they need to get to know you. They need to understand who you are, what makes you tick, how do you do your deals, how do they trust you. And so there's lots of different places for them to experience us, so to speak. And
Sure.
then they finally decide to sort of, yeah, you know what, I'm in. And typically people start out with us with a relatively small amount. Our minimum's 100. Sometimes we'll go below that if I want somebody to be super comfortable, because I want the relationship to be a long-term relationship, not a short-term relationship. So
Sure.
really, all of the above is how we get our investors. The bulk of it, though, comes from our referrals and repeat investors.
What do you think? What's the second bulk? The bulk comes from repeats and so on. What's the second bulk? What's the second best channel you found to gather investors?
Yeah, online marketing and trade shows. People. We do the money show. We're doing it 5 times this year. It's in Orlando. Well, it's virtual. I think there's another one coming up in August here, but it's virtual, and people, go to that show for the specific reason of trying to figure out where to put their money. People find us on Veravest. People found us in the Private Investor Club. We go to the live. We speak at the live money show, as well as podcasts. I mean, people like this very podcast here, might hear us, and it might be the 7th or 8th time they've heard me talk. Say, you know what, I want to get in. So to put the second source, the biggest source of new investors into a bucket, I would say it's general online presence. It really is. People are used to doing that now.
Yeah, and I think a lot of people are starting to get more comfortable with finding people like you and me online and
Mm-hmm.
figuring out, okay, these are the questions I need to ask in order to incorporate trust into this relationship so that I know what's going on. And I guess
Mm-hmm.
the other part of that is the blind fund. Now, I've heard of there's probably as many ways to set up a fund or handle a fund as there is uh, different ways to do anything. But
Yeah.
the blind fund, do you accept the entire amount of money into your fund immediately? Do you do capital calls? Do you buy specific properties and then call for the capital? How does all of that look?
Yeah, great question. So it's interesting, when I made the switch, when we decided to make that jump from syndication to the blind pool fund model, most people prepared me for what they thought was the obvious fact, and that was that your investors won't come because it's a different model. They're not used to it. They're uncomfortable with it because they don't just get to see the asset first. And so, I thought, well, wait a minute. We've got a great set of investors. I'm doing the exact same thing. It's just in a different structure. So what I did is I made our fund terms look very, very similar to a syndication. The acquisition fee, the asset management fee, the 80-20 split, preferred return, all of those things we really carried over from our syndication model to our blind pool fund model. Now, uh, so we're out raising money right now. If you want to get into our fund, you make a commitment, and you'll commit, say, $100,000. You read all the documents. Our business, I mean, we've done the same thing for 25 years. We do value add assets in BC class markets with BC class assets. We stay out of the really bad neighborhoods, and we just find deals that we know we can add value to. We hold them for 3 to 5 years and then sell them. So we've been doing the same thing for 25 years. So when you look at our track record, you're going to see repeat, the business plan is almost always the same. There's some nuances depending on the property, but it's still the basic concept is the same. So they understand the business plan from the documents that we give to them, and we're very serious about our commitments to our investors. So
Sure.
we then go look for those deals. And then when we find the first deal for that fund, we call whatever amount of capital is necessary. They then send the funds, then the preferred return starts to accrue, and we pay that out quarterly. And then when we sell an asset, they get their money back, they get the preferred return. And only then, after you've gotten all your money back that you've committed to the whole fund, do we get to the 80-20 split. So there's a lot of really big, benefits to the investors.
Yeah, and and having that what you just described there as being like really just a very sound process. And and I know that a lot of people are trying to get into this space with that process, but the one thing they're not bringing with them is experience.
Yep.
And I've noticed that time and time and time and time
Yeah.
again. And there's literally no substitution for experience in this business because the thing is that people like myself, like yourself, who have been in this business and we've seen things, we've done outside investor deals and so on and so forth, we understand the nuances that come along with and the potential hurdles that are going to be there. So when you're underwriting against these hurdles and your investor knows, hey, this guy's been there and he's cleared these hurdles before. And when you're
Hmm.
underwriting against these hurdles and you know to underwrite against these hurdles,
Yes.
man, it changes the perspective of everything, and it creates in my personal business, it creates an alignment of interests with the investing party that says, hey, we're in this together. Let's go. I just hung up the phone with an investor just a little bit ago, and I said, I see, we're getting ready to roll out of a smaller asset, right? And
Hmm.
he said, I said, we could do anything you want to do. We could return the capital, we can keep it in and roll to the next deal and just start another deal. And of course, he's like, let's just leave it and let's roll with the next deal. And so
Hmm.
I guess what I'm getting at is there's just once you start getting this experience and once you start get because honestly, rental properties are you're borderline in the service business as it is, and that's what is so questionable, I think, in a lot of people's minds, because the service business, anything that's based off of the human, anything that has the human element in it to a certain degree, is questionable, right? And
It's hard to
so,
implement. Yeah, it's hard to execute. Yep.
well, yeah, and you always, and I'm the kind of person that when I'm executing, man, like if the slight, like I really let the slightest things take me too far off course at times.
Yeah,
Um,
I hear you.
we
Yep.
all do,
Yep.
right? And I
Hmm.
think that's the nice way of saying, get the hell out of the way. We got stuff we got to get done.
Right.
Um, and so, with that being said, you just have to have that experience. You have to have that base
You
level,
do.
and you have to be able to explain to people that, hey, this could go wrong, that could go wrong, that could go wrong. I've oftentimes said gathering and getting an investor into your deal means telling them all of the things that could go wrong, as
Yep.
well as the things that could go right. Now, we
Yep.
hope these don't go wrong, but if they do, we're going to fix them. We're going to figure out a way, and we're going to go on.
Yeah, what I try to encourage people to think about this, we buy apartment buildings, right? That's all we buy. We don't do anything small. So we're really buying a business. That's
That's
what we're
right.
buying. And the experience, the reason experience is so critical, just like you said, but said another way, we don't know what's coming around the corner, right? Interest rates, inflation, pandemic. I mean, you can't foresee some of these things. So, what's important is that you've bought into a business and you want to have an experienced management team there that is going to be as well positioned as possible to figure out how to deal with whatever unknown is around the corner because it's a business. It's just like any other business. And if somebody has never run a business before, i.e., never run an apartment building before, they're going to be not as well equipped to make really good decisions that are really going to get you through it, whatever it is that's coming. And that's how I want people to think about this, right? Everybody has to start off somewhere with no experience. And I go back to my beginnings, my family member was willing to take a chance on me. And that's
That's right.
that's cool. I'm okay with that. I just struggle with asking a stranger I've never met to invest with me if I've never done it before. I get very uncomfortable even thinking about that because that's a big difference between that and 25 years or so of experience.
That's right. That's right. And I don't have 25 years, but I mean, obviously, we've got 15 in the real estate business in general, and a couple in
That's a lot.
the syndication and the this part of this capital side of this business. But what I
Hmm.
guess the other part that I think a lot of people need an understanding on, and where you can really what separates the 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 winners from the losers, I think, in this business a lot of times, because how much money could you burn through in a due diligence problem? You know what I'm saying? Something you weren't expecting in due diligence, And when you start looking at, like, for instance, this guy was telling me the other day about a $200,000 sewer problem that they ran into. And, and it was just by, like, happened. I mean, it just happened that they had, I'm sorry, they just happened to cross the problem. It wasn't like, hey, go down there and check that sewer. We need to make sure that it's clear. It was like they were checking something else, and the guy was like, man, this toilet's not flushing right. Well, then by the time they traced it all the way down, it was like, wow, wait a minute, this is $200,000. I mean, this is like the difference in the next 10 years profits or not. And they ended up walking from the deal. But I mean, that's just that's the kind of stuff that, when you're in this business and you're used to little things happening, obviously there's going to be little stuff. There's always going to be little stuff.
Of course.
But the big stuff that could really burn you to the ground is what you really have to look out for. And, and you have to buy for cash flow. That's the other thing. You buy for cash flow. The other stuff is kind of buy for cash flow. You're obviously going to get some rent increase and so on and so forth. But so I guess my next question is where are you all kind of headed right now? I mean, you said you've got 18 deals. So obviously you're doing about a deal every year and a half. It seems like, if you look on average from 97 through today. Do you have any deals on the horizon, getting ready to close anything, how does it look right now?
Yeah. So I took a few years off in the middle of that whole time, only because I went through a divorce. I had young children, as I indicated before. So, I spend a lot of time with the kids. So it's we have deal probably merged on both ends of that spectrum. But where are we headed now? So we're working on fund number 2.
Okay.
Raising money. We like funds that are between 10 and 20 million. It allows us to get 3 to hopefully 4 deals inside a fund that allows us to realize the economies of, one set of documents across 4 deals. Just think about the money that saves. We like the fact that we get some diversification within the fund. So we're going to stay in this fund space. We're going to stick to growth markets. We primarily buy in Florida. We're going to continue to expand that. And to other states.
I don't know how all you people on my podcast are all investing in Florida. I don't know is there enough room in Florida for all this? My God.
Well,
I'm sure my listeners are like, dude, where are you finding all these people? But it's like, golly.
Well, here's what helps when you've got 25 years experience, you've got a 10 or 15 or $20 million fund raised, and you're super integrated in the market, and the brokers extremely well.
That's right.
When you go to that broker community, right? Think about the syndicator. He's still got to raise the money, right? He's relatively inexperienced. And here we come, 25 years of experience. They know we don't retrade. They know that it's going to be an easy deal for them. We'll be in and out in DD in a couple of days. They know, the brokers know their seller's going to have a good experience. And they know that we don't have to raise the money. Well, guess what? That gives us a massive buying advantage.
I've oftentimes, when we started raising for our fund, of course, then we ultimately integrated as a fund of funds. But when we started, I'm like, listen, you mentioned, you hit on several points there, especially diversification. Diversification is like our middle name. 3,000 Diversification Capital is what we need to be called, because once you start separating those risks, and you separate geographically, you separate as far as we're concerned. Now, as far as you're concerned, and the like you said, you're going to be in and out and due diligence. The brokers know that they're going to have a good experience, and the sellers are going to have a good experience, and everybody's going to be happy in the end. And that's all worth it. And a lot of people, from the real estate sales standpoint, and I can attest to my time in the business.
Hi, this is Casey Brown, host of the Cash Flow Pro podcast and YouTube channel. Have you been thinking about investing in real estate but just don't know where to begin? I'd like to help by inviting you to check out our website at www.3000capital.com. There you will find an array of material that will help you learn all about real estate syndication. And while you're there, be sure to check out our free video series download titled 5 Must-Know Keys to Success in Passive Real Estate Investing. I'd also like to personally thank you for making Cash Flow Pro part of your day. Now, back to the show.
There's enough good customers out there like yourselves and like other to not fool with somebody that thinks we owe them something. Like there's a general consensus amongst a certain portion of the population that thinks they get up every day and they're like, they think the car salesman owes them something and they think the real estate agent owes them something. And why they think that, I don't know. But I'm like, those people are not ever going to get a deal from me because I'm going to be the one that sees the deal. And you're just the same way. If I've got a client I know is an easy purchase and there's no problems, it's not going to be any BS and cash deal, whatever, it's done. And the being able to operate without having the capital or having to go raise the capital, that's the big deal. And I've tried to sell that many times to investors. I don't want to say sell that. I've tried to get folks to invest on that premise because it's going to increase your return, because we are going to be able to move faster in a deal. We're going to be able to clear this deal faster. And the faster we can clear the deal, the cheaper you're going to buy it, the better deal you're going to get on the initial offering from the broker and from the seller. All in all, it's silly to not, at least in that regard, act some way towards having that capital already raised.
Yeah, no, I agree. I will tell you the funds, I've talked to, dozens of investors all the time. And some people they want to kick the tires themselves. They just do. And those people, that's fine. That I want, what matters to me more is that they're where they should be. Yep. Right. Somebody like that shouldn't be in a fund, because they're going to be stressed out the whole time that they're not going to get to see the asset and buy off and sign off before the asset's bought. So I really spend a lot of time with investors just understanding, hey, are you comfortable with this? This is the deal. And remember, when you've done it 18 times, people start to say, well, okay, he's got it down by now, right? You're probably not going to change your business plan. That's where the experience comes in.
That's right.
So I do think, you're right. Diversification is a huge deal. When you're getting awarded those deals, the first deal we put in the last fund never saw the market. The second deal, we kind of knew the guy and he knew who we were because of, we're just decent people in our markets. He decided to sell to us. I don't know who else was out there offering, but it was a marketed deal. Third deal I know was marketed. I know we weren't top price. I know we weren't, but that broker had very high confidence that we could get
save money. Terms save money. Terms save money.
Yeah.
And like you said, even if it was a marketed deal, man, they were like, hey, this guy's a cash buyer. We got a 7-day due diligence period. That means on the 8th day, their escrow money is ours. And we go forward instead of you get down 2 weeks into the path and then the buyer wants to be like, hey, man, do you think the sellers would finance this for us? It's just that's the kind of stuff that's
yes,
so
I know.
And I'm just like, no, man. And the brokers, that broker is going to come to you next time he has a deal. And
brokers are people. They want to make money. They want their sellers to be happy, their clients to be happy with them. The last thing brokers want is to get that deal back because you tried to retrade them. And now the deal's got to go back on the market. Because what happens? That deal gets tainted. And now the seller, what happens in really competitive markets is the broker presents the seller with 10, 12, 15, who knows? Sometimes 30 offers on a deal, right? And that seller has to rely on the broker to parse those buyers and say, okay, who's for real, who's not, and what to go. There's a real consultative process that goes on there. I know because I've sold with brokers and I know what they do. And that seller really relies on that broker to help guide them to the right offer. And then if the broker guides the seller to a particular buyer, and that buyer then jerks the seller around, tries to retrade, does all the things you shouldn't do, that broker's really got egg on his face because that seller typically looked to the broker to advise him. And boy, did he make a mistake.
From a broker with egg on his face that I've had a time or two in my career.
Mm-hmm.
Man, there's a 0% chance that guy's getting a call next time I get a deal.
You're people. Brokers are people, just like you and I are. They're no different. They're no different.
And real estate agents, unfortunately there's so many in the market that a lot of them sell themselves short, and they think that the new agents and stuff, they come in and they tell me calls you get when you get a new listing, and they call and they want to know in this market if the seller will finance. And I'm like, oh my gosh, man. Well, my client needs seller financing. Sorry. Listen,
Yeah.
And I try to be like, hey, the best thing you can do is let them go. But nevertheless, not for me to determine how valuable their time is. I can only.
Yeah, there was a time in my career when I got some seller financing and it worked. It depends on the market. If it's not a super hot market, there's a lot of reasons that sellers will do that. But, it's hard to go to a competitive market like Florida and ask for seller financing. It's just not going to happen.
Yeah, that's right. So,
yeah,
all right. Well, listen, Ken, we're running out of time here, but we've got a couple questions we ask everybody that comes on the show. The first is, what is the best book that you've recently read or are currently reading?
Yeah, boy, I read constantly. I've recently read Cardone's 10X books. Love those books. What else have I read recently? Oh, the list goes on and on and on. Stephen Covey's books. I read The 7 Habits. I live by that. The E-Myth Revisited. Gerber, if you've read him, that helps. As you continue, your business continues to mature. It helps keep you focused on doing the right things. There's a lot. I am constantly reading. So, sure. But those are 3 that come to mind right off the top of my head.
Awesome. What is a dream vacation that you have either taken or hope to take?
Yeah, you know what? Our family loves to go cruise. And the reason we do, we all have different interests. And we go on one of the big ships, typically a Royal Caribbean ship. And there's stuff for my younger kids to do. There's stuff for my wife and I to do. It's all over the map. We can all have a good time, go to different destinations. It's a great way to see the world. So that we do that a lot. And we got another one coming up in September we're really looking forward to.
Awesome. Well, listen, if the listeners heard something that resonated with them and they'd like to reach out and learn more about you, learn more about your company, how can they do that?
Yeah, so I wrote a book your readers might be interested in. Go to kripartners.com/ebook. The name of the book is Multifamily Real Estate's a Total Game Changer. I address 2 things. The first is the number one question everybody's trying to figure out, and that is they know there's a ton of money in real estate. They're just trying to figure out how it fits into their life. And that is a real battle for a lot of people. And the first half of the book, I try to help them think through that process. Now, the second part of the book, because most people probably should be passive investors because they've got a full-time job or whatever their life situation. So the second half of the book focuses on how do you vet sponsors like us? How do you vet sponsors like you and I to make sure we're for real? What kind of questions should you ask? What really goes on in this business? I want to give them some insight so that they can help ask, they can be prepared to ask good questions, because what matters to me most is that they're with the right sponsor that matches their goals to the sponsor's goals, and they have a good experience, because then we all win. So it's kripartners.com/ebook. It's free. You just got to get on my mail list. If you want to get out of it, then just subscribe. You'll never hear from me again. But that's probably the best way.
All right, Ken, I couldn't ask for it any better than that right there. So listen, thank you so much for taking your time to be on the show today. And listeners, as always, please go down and leave us a 5-star review, and also write a review so that other people may know what we talk about here on the Cashflow Pro and whether it fits their needs. And also, while you are there, please hit that subscribe button so that you'll be notified when we release new episodes, which is daily. And we want to thank you again for taking the time, Ken, to be with us. And listeners, thank you for taking the time to listen to the show today. And we hope everybody has a wonderful rest of the day. Thank you.
Cashflow Pro is hosted by Casey Brown, founder and CEO of 3000 Capital, a commercial real estate investment firm committed to providing its investors with ongoing cash flow and helping them build long-term wealth. If you enjoyed today's podcast, make sure to hit that subscribe button so you'll be notified about all our future episodes. You can find more information about us and our investment philosophy by clicking the link in the show notes below. Thanks for listening.